New reports suggest that Pepsi is planning to raise some prices as well. Sources telling the publication Beverage Digest that prices of Pepsi's concentrates are expected to climb by 10%. Canned and bottled soda prices will increase between 3 and 5% for distributors. So what does Doug Flynn make of all this? He joins us now, certified financial planner, co-founder at Flynn Capital Management. Ongoing conversation we've been having about what's the impact of tariffs, how long can companies eat costs. So, you know, like PlayStation, that'll get a lot of headlines. A lot of people like their PlayStations, and prices are going to go up a little bit. So are we going to see more of this as time goes on?
I think so. I think it's creeping in here and there. So you have to look at each case individually, per se, because some of them are still using it as a convenient excuse. If they haven't raised, like PlayStation, they raised internationally earlier in the year. They did not do it in the U.S. Also, you have to look at Sony. Sony has predicted that their sales on the PlayStation are going to be down about 18 or 19% this year. So some of that is offsetting some of the major decline in sales that they're having. So you have that issue. But as far as the concentrate they're using in Pepsi, that is clearly tariff related. And so I think you're going to see things that absolutely are tariff related, other things that are a mix of that. And so whether or not it all passes down, we're still seeing that play out.
You know, I did chuckle to myself at the beginning when you said sometimes these things are a convenient excuse, even though, like this is legit. I was thinking back, covering business news for years. It used to always be the weather. Remember they would say that? You say, oh, the weather. Like, what are you talking about? You're based in Hawaii, the weather. So it was always, and then, oh, but we couldn't, make our numbers. So it's always, you got to kind of look beyond it sometimes. But you're right, sometimes it's also legit. Target today came out with the news that they have this new CEO. So a couple things. The sales haven't been great at Target. I know there was same-store sales dropping like almost 2%, and then a 19.4% fall in operating income from Target. So you say, oh, I'm a fresh start. By the way, good personal story from the guy that they named the CEO. He was like an intern there. Did you see that? 2003, he was an intern at Target. Now he's the CEO. So there's hope for you yet, Doug. Right?
Yeah, you never know how high you can go, right? When you set your mind to it. But look, this stock has been a trouble for a while. I mean, it's great that they have somebody that has rose up through the ranks, has been there 20 years, was a former CFO, now he's a COO. So that's all good, but they've got a lot of challenges. I always like to compare things in the same category. This is in consumer staples, and the one you want to compare to there is Walmart. And Walmart basically has been, their stock price has gone up twice as much as Target, and they've done it with half the risk. And so you have to look at what are the reasons for that, and this has a lot to do with the fact that their sales have been, as you said, completely flat for like the last 4 years, and the stock is down about 60% from its high 4 years ago, and so they have a lot of work to do. The CEO is coming out, and you want to see it, but the market's basically yawning at this because I think we all know what they need to do, and they just haven't executed yet. So maybe he'll execute, but we're going to wait and see if he does before we reward the investors in it. I think that's how it's going.
Yeah, put the intern in charge. Might work out. Finally, this is an interesting one too. Hertz, the rental car company, is selling pre-owned vehicles now directly on Amazon. Amazon has Amazon Auto, so I don't know if this is like a Carvana competitor, or what did you make of this?
Yeah, I think that, the Carvana and CarMax have absolutely proven that online car sales works. They've done a great job in a lot of cases. And so Amazon launched the autos with Hyundai in December. They just started adding some of the pre-owned stuff earlier this month. And this is sort of the first major fleet. But, where it's coming from, Amazon, of course, wants to sell everything to everybody. So you look at Hertz. And Hertz, you may remember 5 years ago, went into bankruptcy, and then it emerged about 4 years ago. And their stock is about a $5 stock. They're losing money. So their CEO is really trying to leverage the name that Hertz has into actually a profitable company. And so they're looking at a lot of things, a lot of ways to deliver that. This is another one. So strategic partnerships are a key. I think you'll see more and more of those as we move forward into AI and other kinds of things that go on. Partnering up where you don't have all the strengths is a really good thing, and then leverage into your own strengths. So that's proving out here.
Thank you, Doug. As always, Doug Flynn, closing bell time.